discussion about these other markets, the futures and the Forex market, you mentioned something pretty interesting. So the stock market, that's open 6.5 hours a day, 8:30 until 3. Now, do you think the professionals or the institutions or the successful traders and investors only trade between 8:30 and 3 our time?
No, the successful don't. That's one of the reasons that they use these assets that are available 24 hours.
So with the 24-hour market, does that mean a lot of people think 24-hour markets, they have to trade for 24 hours. That's not what it means. So it's available to get in your positions and out of your positions in the evening. We're here, 8:30 till 3 is our time in the stock market. A lot of people work during the day. Now, when they participate, they can, the average investor or us, we can participate in the evening. So that's a great way to utilize that. So let's dissect a little bit more about these futures and Forex market. So they're 24 hours. Now talk about the buying power.
Sure. Yeah, and the important thing to remember is that these are assets that are available to anybody. They're not just the world of the institutions and the hedge fund managers. Anybody can trade and invest using these assets. The important thing, by the way, is that you don't do it unless you know what you're doing. It's like anything else. You wouldn't go to an airport and fly an airplane if you've never been in an airplane before. And that's where proper education comes in. But in the futures market, one of the great things about the futures market, it is a combination of correlated and non-correlated assets, which means that it's a great asset to use for diversification. We're talking about the major stock markets, commodities, the soft commodities like corn, sugar, soybeans, oil, gold, silver, currencies, interest rates, a number of different choices there, again, some of which are not correlated, so it gives you a great opportunity to have a well-positioned, a well-diversified portfolio.
Did you mention the major indexes? You can trade the S&P 500,
right.
the Dow, the NASDAQ. So think about this. Us as average investors, we always think, I don't know the futures market, so I don't want to trade that. Well, that's an opportunity, but you can still trade the stock market within the futures market.
Exactly.
Utilize that buying power. Continue that discussion on this buying power.
Sure. Yeah, the term buying power. Really, when we talk about that, we're talking about the buying power, magnifying the value of your investment dollars. And the reason that is available with these assets is they're leveraged. The brokers will allow somebody to set up an account with let's say $1,000 or $2,000, but control maybe 20 times or 50 times or 100 times that much in an investment. That's why the big institutions use it. It's the buying power. It's just really magnifying the value of every dollar that they are investing.
Now, there's two, it's a double-edged sword. So why do you want to protect what you have?
No. So what you're saying is that if leverage goes in your favor, it can go against you.
It's a possibility, but if you use it properly, there's two different things there.
Okay, let's make this very clear. The number one thing that everybody, no matter what you are investing in, what you're trading, the number one thing to learn is risk management. And don't fear that. It's just something you learn to control and to manage. Especially using a platform that we provide our students, the number one thing that anybody enters into that platform is the maximum amount of risk they're willing to take on any individual trade. So even though you may be controlling $100,000 of an asset, the maximum risk might be $100 or $200.
So you control that, and that's why the institutions or the successful, that's why they're always creating this cash flow, because they control that.
Right. If you look at the difference in returns between the institutions and the novice traders, the public, it's significant. And one of the reasons is that, first of all, they're using these leveraged assets. Number two is they control their risk. And number three is that they're taking advantage of different directions. They have the opportunity to participate in an upward moving market, a downward moving market, and a sideways moving market. There are assets that will provide benefits in all three directions.
That's important to understand, is three directions. I want to talk about that in this third segment. So Al, don't let me forget about that.
I won't.
But
I better write it down.
Yeah, you better write that down. But Al, we have a lot of listeners that want to understand more about these other asset classes, but also how and why these brokers give you this leverage. It's a great thing, but you want to learn how to use it properly.